All right, very good morning to you, Kunal. Good morning to you as well, Mr. Chokkalingam. Thanks so much for joining us on the show. And Mr. Chokkalingam, coming to you, this one is coming in from Sashi, who's written to us about Cochin Shipyard as well as Garden Reach. He had purchased both of these counters at the levels of around 2,400 rupees per share. He wants to know what should he do with both of them right now because these counters have actually seen the maximum bit of a correction.
Unfortunately, even after the fall, I don't see any valuation comfort in Cochin Shipyard, nor in the other different stock. So I would suggest, selling the stock probably if there is any small recovery also, one can sell.
All right, that's the take on Cochin Shipyard. But Mr. Chokkalingam, what's your view on IOC? Because Mohit from Ludhiana has been holding 1,500 shares. His buy price is just 77 rupees and he wants to stay invested for the next 2 years. Will that be a good idea?
Not really, because oil and gas sector remains as an extremely volatile business due to volatility in the oil prices and also the gas price, oil price. They are also regulated. So instead of holding on to IOC, I would suggest strongly considering Coal India. The Coal India doesn't have that kind of volatility, stable coal prices, and it's a game on the volume, and also it's a game on getting into non-coal minerals like graphite, which I firmly believe should improve the valuation multiple, which is currently in poor single digit, and also it gives you dividend yield of around 5%. So I have a strong conviction in Coal India.
This next one is coming from Manish Bhatt. He's writing to us from Ahmedabad. He has two lots, Kunal, one of Vedanta, two lots each of Vedanta at about 503, UPL at around 494, October expiry. With what is expected in the next 2 weeks? Hold or switch with loss?
So I'm assuming UPL is 594, not 494. I think Vedanta. So both of these charts are looking attractive from a medium-term play, but my only concern is that from a short-term charts, from a short-term view, both of these stocks are finding some bit of resistance. So, for example, on a very short-term basis, 595, 600 approximately is a resistance for UPL, and the stock over the last 3-4 days of this bounce and then staying above the 50-day moving average has failed to cross over above those 600 levels. So which means we could be looking at a near-term resistance at this zone. I would suggest that if it comes very close to your cost price, say 590 plus levels, that could be a time where you may look to consider booking out or your positions over there and then look to buy back again on dips. For Vedanta, the case could be very similar. The stock seems to finding resistance at the 505, 510 mark. So I think in the last 3-4 days, there have been 3 or 4 attempts towards the stock breaking past about those levels, but it's failed to cross over about the 510 mark. So again, 505 to 510 could be a range where you may look to exit your positions on Vedanta and look to buy back when the stock comes back to 490, 495 mark.
All right, that's the take on both of these large cap names. But Mr. Chokkalingam, the next query is from Mr. Chandrasekhar, and he's saying that please suggest amongst ACC as well as Ambuja Cement, which one is the best one?
In my view, ACC is better than Ambuja Cement.
All right, so short and sweet answer, ACC is much better than Ambuja Cements. But let's talk about Hyundai IPO. Ron wants to know whether he should go ahead and apply for this one or no. Have you studied the financials of Hyundai by any chance? Mr. Chokkalingam, what's your take if somebody wants to subscribe to this IPO? Would it be a yes or a no?
I would suggest no. Though the valuation is similar to Maruti, but Maruti is a leader, it needs premium. So therefore, Hyundai needs a discount. And second issue is that suddenly the passenger vehicle sales growth has moderated substantially. Even SUV, which was growing in strong double digit, now it has come down to close to single digit. So I believe in the short term there will be stress on SUV business, and therefore also considering the magnitude of the proceeds, it may not be like other small cap, mid cap IPOs. There is a chance of possibly losing money also on listing. Therefore, being a conservative myself, I would avoid subscribing to Hyundai.
Right, that's the take coming in on Hyundai IPO. The issue opens tomorrow for the retail investors, so all eyes on that. Moving on to the next query, and this one is coming in from Ramesh from Delhi. And Kunal, let me take it from you. He also has two choices, and he wants you to pick any one of them. One is Sona BLW, and the other one is Uno Minda. Two of the auto ancillary names. Any stock that you like at this point in time?
So I think if you give me two choices out of the two, I will probably pick Uno Minda. That's a chart which is looking fairly relatively stronger. I would say out of the two, Sona Comstar or Sona BLW. That's a chart which I think is nearing its 200-day moving average. There could be a potential correction for the stock in case if it falls below its long-term moving average. On the other hand, Uno Minda I think is trading with a margin of 15% higher from its long-term moving average, which is at 860. Stock is at 1000 approximately. So that's a relatively more stronger chart. I would probably believe that buying strength is a better strategy in this kind of a market when things become a lot more volatile as well as wobbly. So I think in that sense, I would probably pick Uno Minda.
All right, this next one is coming in from Anand Mahishi from Bangalore. He wants to know about Tata Elxsi. He has 8 shares of Tata Elxsi purchased at 2100 rupees per share. He's saying he can hold it for a year or two, or should he look to switch to Trent or Titan? What's your take coming in on this one, Mr. Chokkalingam? I'll take this query to you because he is in Tata Elxsi, sitting with very good set of profits. Should he now make a switch to Trent or Titan, which are leaders in their segments?
Tactically, it's a hold, Tata Elxsi, because the result is slightly better in terms of growth as compared to previous quarters. So tactically, there is an opportunity in my view for another 5% or 8% upside. Probably after realizing that, one can move to Titan for a longer time frame.
Right. The next query that I have, Mr. Chokkalingam, is coming from Ravi Kumar from Chennai, and he has posted this query specifically for you, and he wants your advice on 3 large cap names. The first one is Dr. Reddy's. He's holding 46 shares. His buy price is 6,816 rupees. The next one is Reliance, results due today. He's holding 76 shares, buy price close to 2,900 rupees. And he also has another stock, which is Indigo, 36 shares at a price of 4,753 rupees. Mr. Chokkalingam, on these 3 large cap names, which one to hold or average at this point in time? What will be your advice?
Extremely bullish on all these 3 large caps. In fact, we have a buy rating on all these 3. Dr. Reddy, because of the rich cash and too many acquisitions and also marketing tie-up with the reputed names. So I believe all these augur well for Dr. Reddy. I believe it is one of the safest stocks in the large cap space. Similarly, Reliance Industry, particularly after a recent 8-9% correction, it looks extremely attractive. I'm pretty confident that already the management indicated doubling the value. Therefore, since market price is also down, there is a possibility of early unlocking value from Reliance Jio and Reliance Retail. Even otherwise, oil and gas share is going down drastically. So re-rating also would happen. So I am extremely bullish on Reliance. Indigo, oil price has gone up nearly 10% from month low because of the war. But I have a firm view, contra view, that once you see slight moderation in war between Israel and Iran, you will see a crash in the oil price, because in earlier wars and also earlier when this kind of stimulus package came from China, the oil price tend to go close to $100. It is now finding it very difficult to cross $80, which shows the slowdown in the world economy and slowdown in the demand for oil. And I have a firm view oil price will crash in the short term itself. That would augur well for airline leader Indigo. So all these 3 I have extreme conviction, and I have maintained the buy recommendation.
All right, so those are the buy calls coming in on those select large cap players. But on that note, we'll slip into a break on this edition of Buy Now Sell Now. When we come back, we'll continue taking your queries. Don't go anywhere. Welcome back. You're watching Buy Now Sell Now Tina show, where we get you answers for all of your stock related queries. We continue taking all of your stock related queries then, and this next one is coming in from He's not mentioned his name, but he wants to know about Bajaj Housing Finance for the next 6 months to 1 year. He already has 100 shares at a price of 140 rupees per share. Would like to add more if it goes down from his buy price, and it's somewhere around his buy price today, Mr. Chokkalingam, given the fact that the 30-day lock-in period also ends today. So you're seeing some sort of a pressure on Bajaj Housing Finance once again. But what's your take for a period of 1 year, 2 years, or even for the matter of 6 months? How is this one looking like?
Short-term trader, he may hold it, but otherwise, if he's a medium to long-term investor and wants to hold for 1-2 years, this is not the right price, because even at current price, it is close to 7 times price to book value, 6 to 7 times, and I do not find any valuation comfort at this price.
All right, no valuation comfort at this particular price when it comes to Bajaj Housing Finance. But Kunal, the next query that I have is coming from Mr. Singh. He's a senior citizen writing to us from Pune. He wants your advice on Triveni Turbine, holding 500 shares. His buy price is 375 rupees. What to do in this one, Kunal?
Yeah, I think it's an excellent chart. I've been tracking this name over the last 4-5 months, especially from a point when the stock was at 550-600 mark. And from there the move started off. The stock moved to 800, 840 plus levels, and then over the last, I think, 2-3 months or 2 months or so, the stock has been going through a correction / consolidation. So and the recent pickup of price action. So I think on the in the context of the price trends, I think it's a very strong price chart in the making. My sense is that the stock holds potential to even cross the 4-digit mark potentially over the next 12 to 18 months. So looking at the prospect of the last price behavior of the last 6 months or so, and the prospect going ahead, I would probably believe that it's a good stock to hold on to.
All right, then what about Chola Finance then, Kunal? Because Veni, who is a senior citizen, has Chola Finance on the levels of 16-19 rupees per share and saying there is in heavy loss. So can hold or look to average this one right now?
Just hold on to the stock. I would not suggest an averaging out, because there is relative weakness for the stock as compared to many of its other peers from the NBFC stroke HFC pocket. So I think in that context, maybe the stock is just about getting into a time-wise consolidation. But if the sector and if many of the other peers, if they start to, or they continue to move up higher, then eventually even this stock would probably try to play a catch-up. So as of now, hold. But I think in case if you get very close to your cost price on Chola Finance, then I think it would make a lot of sense for you to switch from this stock towards the sector leaders.
All right, that's the take on Chola Finance. With the next query, Kunal, let me once again take it from you, because Sudhir from Bangalore wants to know, is this a good time to actually book out profits in MCX, because he's been holding 500 shares with a buy price of 5,300 rupees.
Trends are very rare to find, and stocks like MCX, I think, has been a trending stock, classical trending stock. I remember, I think, tracking this name when it was almost at 1,800, 1,600. Few years back, towards the point when the stock is at 6,000 plus mark. So I think it's done very well, and the stock, I think, on the longer term chart still looks very attractive. Now, time and again, there would be points where the stock gets back into a corrective mode, mean reversion phase. But if the long term charts are attractive, and if you're a long term investor, then I think it makes sense to hold on to the stock. In case if you're getting a bit more on the edge to try and book out profits, then I would suggest that it makes sense to book partial profits, since you're sitting on almost 20% gains, and then look to buy back in case if the stock gets back into a mild correction.
All right, this next query is coming in from Chaitanya. He's writing to us from Hyderabad. Mr. Chokkalingam, he wants to know about IRFC and IREDA. What's your view on both of these counters? He's got IREDA at the levels of 250, IRFC at around 98.
Unfortunately, I do not have valuation comfort in both IRFC and IREDA, even after the recent correction. So in PSU pack, I would continue to recommend stocks like Coal India and Walmart Lari company.
All right, that's the take on both of these counters. But the next query that I have is coming in on Indian hotels, and Mr. Chokkalingam Megha from UAE wants to know about Indian hotels. Her buy price is 650 rupees.
Hotel may rise even 5-10%, definitely, but in hotel space, I would prefer Taj GVK. It is a joint venture of Indian Hotel, in which Indian Hotel has a 25% stake. And Taj GVK is the cheapest hotel stock, and some expansions are also taking place. Cheapest in terms of enterprise value per room. So we have a strong conviction in Taj GVK. we believe that TAGVK can give a better return than Indian hotels.
All right, this next query that I have is coming in from Mahalakshmi from Hyderabad, has 7 shares of Siemens at the levels of 70 to 30 and 57 shares of ABB at 5,300 rupees per share for the long term. She wants to know, should she look to exit out of Siemens and look to add some more of ABB in the portfolio? What's your take, Mr. Chokkalingam, on this? Do you think fundamentally it makes sense to make that switch from Siemens to an ABB, in fact add some more of ABB in the portfolio?
I have a view that it is better to hold Siemens at the current prices compared to ABB.
All right, the next query that I have is coming in from Indu, and Kunal, she's been holding JSW Energy and having 85% profit in this particular stock. It did fail to cross 800 rupees is what she's highlighting. Is there further down move expected, or should she go ahead and exit at this price point? How is the technical setup looking like?
So you may consider booking out some profits, but I think 725 could be a better level. 725 to 735 is a better range to try and book profits on the stock. But on the downside also, I think 650 seems to be a major support. So I think closer the stock comes to that 650 levels, the better it is for you to look for buyback. So my sense is that the strategy which you should be adopting is closer to 725. You can consider booking out profits for from JSW Energy, and then in case if the stock corrects back again, comes closer to that 650 mark, look to re-enter.
All right, Mr. Chokkalingam, this next query that I have is coming in from Thomas. He's writing to us from Chennai, and he wants to know, is this the right time to go ahead and buy Ola Electric for a period of about 2 years? What's your take on this one? Do you think it's advisable fundamentally to go ahead and buy Ola Electric at the levels that it is trading at currently?
From trading perspective, it is possible to give a 10% to 15% return. But if you ask me, my long-term view, I would not touch the stock even at this price because a rough calculation indicates that if you are holding for say 3 years or 2 years, it has to turn around from annualized loss of over 1,000 crore to 1,000 crore profit within 2-3 years, which I believe will be very difficult for EV player because unlike fuel-based two-wheeler, EV two-wheeler is really congested, too much of competition, and I am not that bullish for the long term at the current price.
That's the take coming in on Ola Electric. But the next query that I have is coming in on Max Health. And Kunal, let me take it from you. This one is from Jay Krishnan, and he's been holding the stock from a price of 1,041 rupees. He wants a medium-term outlook on this one. Should he move out of this particular stock since he's at some bit of a loss, or stay invested?
You can stay invested over here, but I would suggest that I think it could be time that you keep a stop loss or a major support point for this trade, because it looks like that the stock has not yet completed its phase of correction. So from 1,080, 1,100 mark, the stock recently fell into the 900 levels, bounced back towards 970, 980, and then now corrected back again to 940 mark, which means that the corrective wave is still not over. The stock may potentially retest the sub 900 levels. I would suggest that keep a buffer stop loss of 880 for Max Healthcare. In case of the stock breaks below those points, I would suggest you to take an exit.
All right, so that's the take coming in on Max Health. On that note, we slip into a break on this edition of Buy Now, Sell Now. When we come back, continue taking your query. Viewers, don't go anywhere.
Welcome back to Buy Now Sell Now, a show where we get you answers for all your stock related queries. We do have both of our experts with us, and Kunal, I'm coming to you for the next query. Achar from Madurai has written to us, and he wants your take on RVNL. Will the stock reach 600 mark? He wants your take on this one. And for Cochin Shipyard, can the stock reach 2,900 mark? What's your view on this, Kunal? He didn't share whether he holds these counters or not, but technically, what's your view?
So I think if you are asking from a very short term view, of course, it could be very, very difficult, because there are two things which have happened. For example, for Cochin Shipyard, the stock has gone into the trade to trade series, which means that there could be possibility that the stock may continue to remain into a drag or a sideways range for some more time. both of these stocks are correcting or are completing their corrective phase along the long-term moving averages. So, which means that the rally which which these stocks had seen, shown over the last 1 to 2 years, 2022 onwards, I think that rally is getting moderated. So, there could be possibility that over the very near term, these stocks may continue to correct for some more time. But if you're asking from a long-term play, then I believe buying these stocks at 40% lower from their previous major highs, 40%, 50% lower from the previous major highs becomes a very good starting point. So my sense is that you can hold on to your existing holdings in case if you have for both of these names, but be ready for maybe another 10% to 15% on the downside. In case if that happens, look to average further.
Alright, this next query that I have is coming from Chandra, writing to us from Pune, wants to know about Natco Pharma, any upside potential in the longer term, what could be the right entry price? Do you think, Mr. Chokkalingam, now is the right time to enter Natco Pharma?
Yeah, the company has done phenomenally well. One can hold it in case it corrects, 5%, then in my view, it will become attractive.
All right. The next query that I have, Kunal, is coming in from RK Jalan. He's a senior citizen and wants your advice whether to go ahead and initiate a buy either in ITC or in Wipro at this price point, or can you suggest him any entry points for both of these names?
See, I'll consider the or in Hindi, not in English, because I would suggest both of them are very important. ITC as well as Wipro. I would probably believe that both of these stocks have been slight underperformers when I look at the recent charts. So my belief is that ITC at current levels of 490-ish thereabout, where it's trading right now, Wipro closer to 530, 540. I think both of these stocks would very soon get back to a point where they would cover up the underperformance with respect to many of the other peers from the respective sectors. So I think at current levels, I would probably believe that if you have a time horizon, if you have the risk appetite, and if you're looking out for some higher returns on a medium-term time scale, then I think both of these charts could look very attractive.
All right, this next query that I have is coming in from Sudhir, writing to us from Kochi. He's a long-term investor. Mr. Chokkalingam wants to know about Affle India. 100 shares at a price of 940 rupees per share. Should he look to go ahead and book profits or hold on to this one?
I would suggest book profit because still the chemical space is, Affle India. I heard it as Affle India. Affle India, I have a sell view. I do not find valuation comfort at this price.
All right, no valuation comfort at this price point. But the next query that I have, Mr. Chokkalingam, is coming in from SK Saran, writing to us from Bangalore. Wants to know, is this the right time to enter Sudarshan Chemicals? The stock did see a great upsurge on Friday's session after announcing the acquisition of pigment division of Heibusch of Germany. How do you see this whole deal panning out for Sudarshan Chemical? And after the great move, still good time to go ahead and buy this one?
Already missed the bus. It has rallied phenomenally. It's a great company. As a conservative investor, I would always have a view that one should see at least one quarterly results post merger of this acquisition or post consolidation of the performance of the acquired company. And then if one gets valuation comfort, one should buy the stock.
All right, this one is coming in from Professor Chalam, wants to know about Tata Motors Kunal. He has 50 shares at a price of 977 rupees per share. He wants to know whether he should add some more on dips, and also what's the future target coming in for Tata Motors.
See, I would suggest to hold on to the stock as of now. You can look to add, but the only confirmation which I would probably be waiting on for on technical charts is the breakout of its 200 DMA. Now, over the last 8, 9, 10 trading sessions, the stock has been trading below its 200-day moving average, but there is no incremental selling pressure. So, on the way up, once the stock breaks above those long-term averages, that's where we believe that the momentum would come back again for Tata Motors. That level closer, at current levels, is closer to 960, 965 mark. So, if you're looking to average, it makes a lot of sense to hold on and average only above 965 mark once the stock sustains.
All right, that's the take coming in on Tata Motors. The next query that I have, Kunal, is coming in from Naresh from Mumbai, holding 450 shares of ONGC. His buy price is 320 rupees. Please advise him whether to hold, sell or buy more at these levels.
See, I would suggest to hold on to the stock and potentially even look to average also. I think 290, 285 looks to be a very good trading range or a support range for ONGC. This also coincides very, very close to the long-term moving average for ONGC. And this is the third consecutive month where you're seeing the stock going to a correction from 340 levels to 290 thereabouts, where the stock is trading right now, which means a decent 15% correction is already shaped up. Maybe there could be another 4-5% in the offing, in terms of correction over the very near term. But I think in terms of the average range, I think closer to 285 to 90 seems to be a good range where you could look to average.
Apologies, Kunal, coming right back to you once again, because this one is coming from Manish Singhania, who is writing to us from West Bengal. We did take Mr. Chokkalingam's take briefly on ABB, but he also wants to know, Manish wants to know whether he can buy ABB for the short term.
Well, in fact, yes, I would probably believe ABB and Siemens, if I can probably pick that also. I think both of these charts are looking very attractive. So last 1 week, when the markets got back into a bounce back mode, both of these charts had given a very strong price volume breakout. Post that, over the next subsequent 2-3 days, these stocks have been moving up higher, and they have confirmed, reconfirmed the breakouts for themselves. So which means that the momentum is coming back again. Wouldn't be surprised that these stocks actually come very close to their life high level. So I think if you're looking at ABB, the stock currently at 8,600 mark, could probably look to retest the levels of 9,000, 9,100 pretty soon.
Alright, the next query that I have, Mr. Chokkalingam, is coming in from Pradeep from Gurgaon, and he wants to know about two stocks. Firstly, he's holding Cummins India, 100 stocks. His buy price is 1,450 rupees. He's already making good profits in this one, but can he go ahead and continue holding this one for the next 2 years? This one is the first query, and the other one is on Lupin, holding 350 shares from a level of close to 1,700 rupees. Should exit or hold this stock?
I prefer Siemens to Cummins, and similarly, I prefer FTC Limited, a small cap company, to Lupin, because Lupin has already played out phenomenally, whereas FTC has corrected, more than 15% from the recent peak, and it's a strong balance sheet, net cash company, and 83% of the revenues from the domestic formulation segment, which gives a lot of comfort and confidence. So therefore, I prefer FDC to Lupin.
Right, this next one is coming in from our viewer, that is, we have Krishnan, who's writing to us from Bangalore, and he wants to know about HDFC Bank. Kunal, 100 shares of HDFC Bank. He wants to know whether he can hold on to it for the next 1 year.
I would definitely believe so. I think it's a good time to try and hold HDFC Bank. Now, I think also at current levels of 50, 60, where it's trading right now, it's a good level where you can look to even average further.
Alright, that's the take on the large cap banking major, HDFC Bank. But the next query that I have is coming in on from Tushar from Delhi. And Kunal, he wants your advice on Torrent Pharma, holding 100 shares from a price of 3,500 rupees. And he also has JK Cement, 100 in quantity, buy price is 4,630 rupees out there. What to do in this one, hold or sell? Torrent Pharma has already rallied from 1,700 to 3,500, and JK is moving in a range. How do you spot these stocks?
So Torrent Pharma is a hold. Stock still looks attractive. The charts are still quite positive. For JK Cement, the stock has bounced off from its 200 moving average. Today's pattern, for example, is a bullish hammer pattern for JK Cement. So looks attractive at current levels, would suggest to even average.
All right, so that's the take coming in on JK Cement. We have Jayashree, who wants to know about Sundaram Finance, 150 shares at 5,010 rupees per share. Could not 3-month target?
So I think from current levels, I would probably believe 5,500, 5,600 could be a near-term target which you can keep for the next 3 months.
Alright, that's the take coming in on Sundaram Finance. But with this fears, it's once again time to slip into a very short break. Don't go anywhere. As we come right back, we will be taking more of your stock related queries. So do write to us, but we'll be back with after this quick break.
Welcome back. You're watching Buy Now, Sell on ET Now. Let's continue taking your queries then. And the next query is coming in from Kumar, who's writing to us from Mysore. Wants to know about Exide Industries for the short term. Kunal, 230 shares he has at a price of 547. Should he hold or exit?
See, I think you should hold on to the stock. The last 4-5 days, we've seen very good volume traction for Exide. The RSI is coming towards a breakout of its previous major swing highs. the recent swing highs. So I think in that sense, I would probably believe that once the stock clears about the levels of 535, there could be a decent upside which could be in the offing over the very near term. So I think in that anticipation, I would suggest a hold.
All right, that's a hold coming in on Exide Industries. But the next query that I have, Mr. Chokkalingam, is coming in on Raymond's. What a one-way move on this particular stock. But it's been fallen off from its highest point. And Balaji from Andhra Pradesh feels stuck in this one, holding 61 shares. His buy price is 1953 rupees. Is that a hold or sell at this price point, or would you advise to go ahead and average this particular stock?
Fortunately, I do not have a valuation comfort even after the recent fall. I believe the stock can move downward even to 1200 based on the fundamentals. So it's a sell.
All right, this next one is coming in from Raj. He has about 220 shares of MTAR Tech at an average price of 2,254 rupees per share. Kunal, what's your take? Hold MTAR Tech?
See, it's a good stock, but I think because of the way many of these PSU defense names, etc., these stocks are falling. Even this stock has gone through a correction. So I believe that a major revival could be expected once the stock crosses above its longer term averages. So far the stock is consolidating. The trading range for the stock is 1650 to 1800 mark. There could be a potential breakout above the 1800 levels, but the bigger breakout could happen once the stock crosses above its long term moving averages. So in that anticipation, would suggest a hold.
That's a hold on MTAR Tech, but taking the 35th query on the show then, and this query, Kunal, is coming in on Titan, wherein Ajit from UAE is holding 10 shares. His buy price is 2600 rupees. This stock has also fallen from its resistance level in the recent while. How do you spot this one? Would you advise to go ahead and add more?
So if you bought at 2600 levels, then I think at current levels, I would suggest to just hold on to the stock. There could be a process of a bounce for the next couple of days. Maybe 3600, 3650 could be a target which you can expect for Titan over the near term, but that could be a point where you may consider booking out profits.
All right, so that's the take coming in on Titan. This one is coming from Nikhil. He also has Vedanta at a price of around 515 rupees per share. Kunal, we just spoke about Vedanta a short while ago, but particularly for a viewer that is Nikhil, what should he do? Book profits or hold on?
See, I would suggest to hold on if you're a long-term investor, but if you're a short-term investor, then 510, 490 is a trading range approximately for Vedanta. So it depends on your time frame. If you're a very short-term investor, then closer to 505, 510 range is where you may consider booking out profits and then look to buy back again on dips. But long-term investor-wise, I would suggest definitely a hold.
Sorry, I stand corrected. So he's not making a profit. He wants to know when should he go ahead to book profits. I believe he was asking when will the stock actually get back to his buy price. His buy price was 515.
So that will take some bit of more time. I think if you're a long-term investor, patient investor, say for at least the next 6 months to 1 year, then there could be a very big breakout which you may probably expect for Vedanta. But I think if it's very short-term oriented, then the stock may consolidate.
All right then, but with this viewers, it's time's up in this edition of Buy Now, Sell Now, and today we have taken like 36 queries in the show. But thank you so much Kunal and Mr. Chokkalingam for joining us today and helping all our viewers resolve their stock related queries. But moving on then, ahead of Maharashtra Assembly polls, Chief Minister Eknath Shinde announced a full toll waiver for the light motor vehicles at all 5 toll booths entering Mumbai, which will be implemented from tonight, and commuters will now be able to use the small vehicles without paying tolls from all 5 toll booths: Daisar, Mulund, Vashi, Airoli and Tinhat Naka.
And on that note, we are totally out of time on this edition of Buy Now, Sell Now. So it's a goodbye from Shrishti, myself, and the team that put the show together. Thank you so much for watching.
There comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits. And then break right through them. Become something more. It's my time to rise.
Hyundai Motor India Limited now proposes an initial public offering of its equity shares. The 100% book built offer is being offered at a price band of Rs 1,865 to Rs 1,960 60 per equity share of face value of rupees 10 each. The anchor investor offer period opens and closes on Monday, October 14th, 2024. Offer opens on Tuesday, October 15th, 2024. Offer closes on Thursday, October 17th, 2024. For risk involved and other details, please refer to the red herring prospectus, which is available on the website of the company, SEBI, BRLMs and the stock exchanges.